Greetings traders, it is January the 12th, recording this quick lesson on the VIX today, which offers some interesting trading opportunities. I'm just going to clear off my charts here quickly before we begin. So, one of my favorite setups, of course, is the early bird setup, and there's a couple of lessons to be learned from today's VIX price action. So, the markets today, they gapped up, the overall markets gapped up. That meant the VIX gapped down, and so what we ended up seeing was a couple of early bird opportunities right from the get-go. So you can see here indicated in the blue lines there, the light blue, we had early bird set up at 10:03 and another one shortly after at 10:07. Now here's how it played out. Interestingly, now here this is I think an attractive play for a couple of reasons. Number one, of course, it's just the early bird setup. But number two is the fact that we had a compelling gap to the upside. So we opened up slightly downward. We have a gap to the upside, which is a natural attractive target, and so that was a good place to begin to look for potential profit targets. So let's just draw it in here, right? So here's our early bird setup on this bar 1003. I happen to try to get long on this particular exchange. And if you had got long here, it went +2 in your favor. I always elect to trail for par once I get up to +2, and this quickly came back and stopped me out for par. Now here again is the opportunity to actually buy again here, right? You can see this area is acting as support, and there's that opportunity to buy this area. And you can see if you had bought that dip again, and it seems to be this case again where the second mouse gets the cheese. This second opportunity is actually the winning opportunity, and so it is oftentimes, especially when you play the VIX and the indices. It's that second mouse gets the cheese scenario where it's usually not the folks who are actually the keenest and who want to get in early who get the reward. It's those folks who are a little more patient and a little more perhaps moderated, who maybe are taking on seemingly it feels like it's more risk, but it actually turns out to be the higher paying trade. So in this case here, this second opportunity was actually the gold opportunity, right? So had you got in to this area here, it rockets up, and once it clears, this previous peak here, it's off to the races. And this is really confirmed here by some of the accompanying volume. Quickly runs up to +3R. Comes back, pulls back to a +2R. This point here at +3, we would have parred to +1R, so our stop would have been here, and really it didn't stop until it hit +7R. We would have trailed to +6, and so that would have been a +6 trade, right? So that's one way you can elect to play something like that. Here's the gap. This is what I usually do: is I'll take off half position at the gap, and then elect to let it trail more aggressively as it gets to some of the higher levels. So for me, I would have taken off something like around right before 5R. I would have taken some off by half, and then try to trail and got another ridden the second half for +7R. Now the other thing I wanted to show here is let's just reset for a second. Let's just take off the initial early bird play. The second early bird play was actually very profitable as well. So the second early bird plays right there. And this one here is also a great setup. So we draw in an early bird, and this one worked right from the get-go. So this one here, you got to take a little bit more risk, as you can see here, and from there you buy. You have to stop around down here, and this thing moved basically in your favor. It got to 5R. We would have trailed to 4R. So in this case, we would have caught 4R. Again, I would have probably taken off half here around 3R, and so we would have probably got a blended of about 3.5R in that trade, and that worked out very well again. So at the end, the lesson here is that oftentimes the early bird, in this case, doesn't necessarily get the worm, right? So especially I think what I see is that this happens more on the indices and the VIX, where you have a lot of traders and players trying to outmaneuver one another. This action here, where they scare out the early buyers, that tends to again wash out the weak hands and the strong hands are the ones who, who take the harder action that is oftentimes buying the second entry. It seems harder, it's counterintuitive, but it seems harder because it feels like you want to get in early, but sometimes it's that second entry. Even using the same risk to reward profiles, the second entry is oftentimes the better entry, so long as everything is still in place, right? We're not looking for setups where the trend has been violated and it's no longer an uptrend anymore, or it's not the momentum's no longer in your favor anymore. You still want to have that win to your sail, so to speak. So in this case, again, this trade works out quite well. So one other thing just to take a look at as we I'll just delete this these risk to reward lines. As we take a look at the higher time frames, it's just important to see how price action tends to work around certain levels. This is what I want to point out. So in this case here's an opening range break play on the 15-minute chart. We're looking at the 15-minute. We have a narrow range candle here, consolidating right on the opening range high. Buying the high of that bar would have worked. Would have actually moved close to 3R in your favor. So that that's a pretty good risk to reward profile for that trade. But a good thing to watch, and what I tend to watch, is just how it reacts to different important moving averages. So I have the 5-period moving average in red, the 8-period in green, and the 20 in blue. And you can see the 20-period moving average it tends to be a very, very good level to look at to see what kind of support or resistance is being offered up at that point. Alright, so as we go back to the 2-minute for a second, you can see just from this price action, hit the 20-period moving average. That pretty much capped the top of the day. We had this descending trend line, this descending moving average, and it really caught the tops of each attempt to go higher on the VIX. So going up one level, and this is actually interesting, just a really quick remark here, and I can spot these very quickly nowadays, but if you draw yesterday's high and today's opening range low, just drawing that in, I'll just quickly draw it in just because I have a lot of experience seeing this. I'll just quickly change this here so you can see for yourself. The 38.2 level is oftentimes a very significant level for a lot of traders. That'll be a place where they'll establish positions as a pullback setup. And you can see right away here, this basically coincided perfectly with a retracement of 38.2%. So we had a strong push to the downside as we had sellers come in. This buy was this is a pullback to resistance. So we had resistance being offered by both the 20-period moving average and of course the 38.2% retracement. That's a very popular Fibonacci trading level. And then the sellers resume their selling. So here, if you can notice this pattern ahead of time, the natural target would be the opening range low, and this is exactly where we closed near the end of the session, is around the opening range low. So trying to find the opportunity to get short in this area here, right, on a low risk entry, it makes a lot of sense to try to go for something here for target the opening range low. And oftentimes that's kind of the expectations that the first profit target is the opening range low or the previous low, right, previous swing low, and then you might want to hold for more if you want to hold overnight or something to that effect. That might be an alternative opportunity there. So one final lesson here as we wrap things up is just zip out a bit here. As we saw here, the opening range, in this case we're looking at the 2-minute opening range high. It offered actually multiple buying opportunities, right? So we showed the first one here at 10:03. I showed one here at 10:07. Look at these other opportunities. So even after it hit our target of up here, it ran down, but the opening range high still offered support. All right. So again, if you had bought this bar here, just watch as you draw on the risk to rewards. That thing ran plus 4R in your favor. Likewise, we popped the yen over here. and it popped again over here off the opening range high, and again you can get in for a good low risk entry. This one here moved again, another looks like +5 in your favor. Right, so the key is to be able to identify days like this. That's a skill in itself, is to be able to identify days like this where you're kind of chopping in a range and you're kind of playing that kind of channel game. You're going back and forth between several moving averages, and you can kind of get a glimpse of that when you go in the higher time frame, as you see this lower opening range and you're bouncing up and against these moving averages. That's kind of a downward price movement, but you have lots of opportunity intraday when volatility is high to try to take advantage of these movements. Alright, so this is a play that is certainly worth exploring and adding to your playbook to try to find a setup or a sort of defined play to fit this type of price action. Alright, hope that helps.